If you're making under 40K a year, there are some ways that you can cut your tax bill and keep more of your hard-earned money. I'm a qualified accountant and I have over 10 years experience working for some leading tax practices in the UK. I'm going to give you 5 actions that you can implement to see a difference today, whether you're self-employed or in traditional employment. I'm going to tell you how to get rid of penalties, tax allowances that people don't claim, and how to get more tax write-offs. Let's start off with how to get rid of penalties. HMRC will issue a penalty if you do not keep up with a tax obligation. That can be if you submit a tax return late. So if you are a landlord, you have to submit a tax return by the 31st of January online. If you forgot to do that, HMRC would automatically send you a £100 penalty, and that can increase to thousands if you forget to submit your tax return for long enough. Penalties actually get issued all the time by HMRC for all sorts of different reasons, and I would see clients get penalties left, right and centre for all sorts of different reasons. But what a lot of people don't know is that you can appeal the penalties and you can get them cancelled or reduced. You do have to have a reasonable excuse for not meeting the obligation. So whether it's serious illness, you can say that your computer stopped working when you're trying to submit your tax return. You can say that you didn't realize you had an obligation, and you can even say that you were relying on somebody else to submit a return for you, but they didn't do it. You need to have a reasonable excuse, and you do need to have tried to submit your tax return or meet your obligation. I'm not suggesting that you lie, but I'm just letting you know that if you do receive a penalty, you don't need to just pay it. You can contact HMRC and you can explain your circumstances and you can try and get that penalty cancelled. Don't think that you have to pay just because HMRC have issued you a penalty. Don't ignore the penalty because then interest can start to add up. It's important that you do speak to them. Number 2, claim all allowances. There are a number of allowances that let you earn money before you start paying tax. The most obvious one is the personal allowance, which lets you earn £12,570 tax-free before you start paying any tax. That one's automatically applied when you are an employee. Another one is the trading allowance. So this applies if you're doing casual work on the side. It could be anything, decorating, buying and selling items for a profit on a platform like Etsy or Vinted. It could be tutoring. Whatever it is, it means that you can earn £1,000 before you start paying tax. So it's a £1,000 tax-free allowance that many people aren't aware of. Another one that is very underused is the married couples allowance. And this allowance means that if one partner in a marriage or a civil partnership is earning less than the personal allowance of £12,570 and their partner is a basic rate taxpayer, the partner that's earning less can transfer part of their tax-free personal allowance to their partner, which reduces their partner's tax bill. So let's say that you don't work and your partner is a basic rate taxpayer. So you can transfer £1,260 of your personal allowance, which you're not using, to your partner, and they will get £252 of tax relief. And it can be backdated 4 years. So some married couples can get back £1,000 from HMRC. And all you need to do is apply online, and then a few weeks later, you can get a check through the post. Another one is the property allowance, which means that you can earn £1,000 from your rental property before you need to start paying tax on your rental income. Next up is tax credits. Tax credits can be worth thousands of pounds every year, but they're being replaced by something called universal credit. And universal credit is designed to help people who are on a low income. So you could be working, but you could be on a fairly low income for where you live, and that's where universal credit can really help you. And with universal credit, there is no set limit for who qualifies. Instead, the government will look at your individual circumstances to decide whether or not you can claim. So you could be a single parent of 2 children renting in an expensive city, and you could actually earn up to £50,000 and still be able to claim universal credit. It entirely depends on your circumstances. So even if you think that you might not qualify, but you are struggling, then it's worth seeing if something like universal credit could help. There is a benefits cap in the UK, so families in London can earn up to £25,000 in benefits, and families outside of London can earn up to £22,000 in benefits. Universal credit is a substantial benefit though. If you are a single person, you could earn up to £400 a month in credits, and at the moment when living costs are so high, that could really go a long way. Next, let's talk about work clothes. Sometimes you can claim tax relief for your work clothes, but not everyone can. There's a well-known case in which a barrister tried to claim tax relief for the suits that she needed to wear in court. But HMRC said that because those clothes could be worn outside of work as well, she wasn't allowed to have the tax write-off. So for most people who have office jobs, they're not going to be able to claim this tax relief. But if you have a job where you need to wear a uniform or a costume or some kind of protective clothing, then there's a good chance that you could get tax relief for those clothes. So it's people like pilots, cabin crew, nurses, midwives, joiners, carpenters. Those are the types of jobs where you could claim this relief. And there's a full list on their HMRC website. It's not a huge amount of money, but say if you're a joiner, you could claim up to £140 of deductions for your protective clothing. So it is something, and it will help you to pay less tax. Working from home costs. You can only claim this if you're a sole trader, if you're in a partnership, or if your job requires you to work far away from the office or there is no office that you can work from. You can't claim this if you choose to work from home and there is an office that you could realistically go to. So it's designed to let you write off a portion of your home office costs from your taxable income. The simplest way to do it is by using HMRC's simplified expenses method, which uses a flat rate to calculate how much you can write off. As long as you work at least 25 hours a month from home, you can claim this. So say you work from home every day and you work full time and it works out to be around 160 hours a month, you would be able to write off £26 a month as work from home costs. It's intended to include a portion of your home utility bills that end up being used whilst you're working. The write-off is there and it's available, it's easy to claim, so if you qualify, you may as well make sure that you are writing that off every year. I hope this video was useful and gave you some good ideas of how you can reduce your tax bill. Thanks for watching. Don't forget to subscribe if you haven't already, because it really will help my channel to grow. See you next time.